everyone. Welcome to our Wednesday morning trading session. Just a moment here as I get everything set up. As we expected, yesterday's session kind of ended up drifting sideways after that early rally. The bears did their best to push the market lower, but it didn't happen. So we got ourselves a little bit of a sideways trading range that took us through the rest of the day, as well as the overnight, a very, very quiet Asian and European session. And here we are opening pretty much where we left off yesterday. So the stock markets, the NASDAQ in particular, continue to be, well, pretty darn neutral. We did just have the opening bell, but here I'll show you on the Hawk. People often ask, how can you tell when a market is going to be choppy? Well, on the Hawk, we're going to get all these yellow bars kind of clustering and printing at more or less the same price level. So that tells us that the market is non-committal here on the Raptor, because it also borrows from the Hawk. You can see yellow bars printing more or less the same price zone. So it could be another day of watching and waiting. The volatility obviously very low, and I don't feel like getting into a trade just for the sake of getting into a trade. It's still early though. Obviously the market just opened up, so we'll stay with them for a little bit here. All right, you can see here on the Raptor now we're flip-flopping on our signals. We've got a cloud crossover signal, which isn't much of a cloud crossover signal, but we're also getting a counter trend signal here, our soft edge sell, and perhaps a chance at a second push entry on the signal. Now let me point out to you why the number one signal, the cloud crossover signal, isn't that strong of a signal. The cloud crossover signals that are strongest tend to occur after a little bit of a trend. Come on, how far back do I have to go? Well, what I'm trying to find is a market that's been trending, and then we get a cloud crossover signal, and those tend to have a little bit more follow through. It's a smoother progression through the market, I suppose. But we are kind of trading in the middle of this trading range that we highlighted. So if this is yesterday's trading range, we're kind of right in the middle, and that's a tricky spot. So this is a difficult trade. We usually have selling going on up here. We usually have buying going on down here. And in the middle, well, that's no man's land. All right. I did take both contracts on this, even though I could have just taken the one. It'll it'll be nice if we do get a little bit of a run out on the trade, as I'm only taking profit on one target, pardon me, one contract at target. Okay, almost to the break even. I think it's safe enough for me to implement the stops. There we go. We hit the break even. And as we get closer toward the bottom end of the trading range, I think I want to have a more aggressive stop strategy. Come on, we just need a little push through this 56, 68 area, and things might open up for us a little bit. Oh, just kiss the profit target. Come on, get down there. Okay, one down, one to go. I'll get my mouse out of the way here so they can get past the primary support zone. Come on. So far, the primary support doing a pretty decent job holding the market up. All right, I'm going to go with the bar high-low strategy now, just to lock in a few extra dollars. If the market reverses here, it's probably going to tag me at breakout anyway, or pardon me, break even anyway. What's the volume like on some of these bars? 5100. Well, that's decent. It's not overwhelming. Normally, this early in the day, we'd see something pushing near 10,000 contracts. Oh, my mouse is in the way again. There we go. Come on. No, there they go. They're going to tap me here in a second. I'm not lucky enough to actually ride out this little swing. All right, here they go. Come on. So this little bar that's forming, obviously fairly influential. If we see a break above, well, um, price is likely to continue higher. If we get a break below, however, we could see the market drift lower, but it's not looking all that good for our short position here at the moment. You know, if the markets were a little bit more fluid, I would probably even entertain leaving my stop up here above the swing high. Let the market swing, continue with its trend, but they're not fluid at all. Just a lot of sideways nonsense lately. It's getting to be quite annoying, actually. Well, it's a little bit of a surprise. I didn't think we were going to get past that. Well, we're not yet. We're still kind of stuck on the primary support zone here. All right, getting a little bit of follow through. Oh, oh, I better stop talking like that. We've got a few new people in the trading room this morning. So welcome, and please don't be shy about asking questions. I do know there have been a couple of questions about the format itself of the trading room, and basically it's a trading and training room. If you haven't noticed already, sometimes I'll go off on a little bit of a tangent, and especially if there's something trading related that needs explanation. And when that happens, sometimes we end up missing some trade signals. So I do my best to point out quality trades to you, because I know there's a few people in the room who like to, well, if they don't mirror my trades, they appreciate my input, and I appreciate that. So I try not to throw a stinker your way if I can help it. But at the same time, it is a training venue also to get you used to using your tools on your own. And the session is only for the morning session. So we go from the market open, depending how the market is, at least to 11 a.m. Central, sometimes, or pardon me, Eastern. Sometimes we'll go a little bit later than that. But a lot of traders start to break for lunch around 11, certainly around 11:30. So that's usually, the prime trading time, that first hour and a half, 2 hours of the day. The afternoon is left to your own devices. If you do trade the afternoon session, if you hit any rough spots or anything, it's a good idea to make a note of it. You can also do a screen shot of your chart if you're having trouble, so you can save it, or you can email it to me directly along with any questions you might have, or you can bring it up the next day so everybody can benefit from something that you may have had difficulty with. Yeah, Andres, the schedule has changed slightly. We did the initial, Andres is mentioning, isn't the Wednesday session supposed to be training? At the beginning of the year, we devoted Tuesdays and Thursdays. Those were set apart for Raptor training. Those sessions are all recorded, and you don't have to sit through the whole hour and a half or 2 hours to get the training. The training is usually the first half hour of the day. And like I said, if there's any questions or anything that are of concern to you, please don't hesitate to ask. I do review the signals every day because, of course, that's the important part. Getting you comfortable with your signals and learning to recognize which ones might be the better opportunity signals. Yeah, I'm getting a few comments here. Anthony says I'm a newbie and I'm still learning the fundamentals of the software, and that's why I'm here. I'm here to help you learn how to use your software to its full potential. Andre is asking, do you look at the 6E? That would be interesting. I've actually got the 6E up on my other monitor, so yes, I can bring the 6E up here. Just a moment. Where did I put you? There you are. So here's the 6E now on the Raptor. And it looks like we just produced a cloud crossover signal here as well on the 6E. Now, I'll tell you one thing about this cloud crossover signal. Typically, what we like to see with the cloud crossover signal is this type of arrangement, where the clouds cross, the market retreats into the clouds, and then the clouds support the crossover. So I like this signal a little better than this signal. Technically, the clouds have crossed, but even though this is a signal, and this is a signal you could certainly take, you need to anticipate the fact that there may be this pullback phase. So in this case, that's demanding you're going to run a deeper stop because there's a very good chance the market is going to pull back into this cloud. So when you're looking at this and it's unfolding and you're getting a number one signal printing and it's a cloud crossover, it's not that you should ignore the signal. But you haven't seen a pullback yet, so you might say, well, maybe I'll hold out for a second push entry. And all the second push means is that we allow the signal to engage, we allow the signal to flinch, and now we know the current limit of the buyers and sellers. So this next bar here effectively becomes our signal bar. Trading this way means that I can probably cover the trade a little bit tighter because I'm not going to be brought in unless the market picked up some new momentum. Now at this point, I would probably scrap the trade, wait for the pullback to complete, and then look for the market to push out again. It may not print another number one signal, but it will definitely print a continuation signal, a number three signal. And given this, sideways sluggish nature of the market, I probably would not go in to the trade with the full risk amount. I would probably go to manual mode. I would probably, put a onesie on it. If it works out, great. If not, well, at least it will have minimized my losing or my loss, sorry, my losing position. I'm multitasking here. Something caught my eye, but So yes, we will keep an eye on the 6E as well. And crude oil very, very sideways today, which you can anticipate because it's crude inventory in about a half an hour's time. Hey, way to go, Aspen. Aspen says, I'm out on the Raptor #2 trade, picked up $220. Nicely done. Looks like I got stopped on this little hiccup here as well. So let's see, where did I get tagged? 56 even. 56.66, sorry, 56.66. Okay, Andres is asking, I see you've got your Raptor set at 4 ticks for the 6E. Ben uses 10 ticks for his. All right. I've always got one set of charts set at our alternate settings of 4, 4, and 6. The reason I do that is in case someone would like to see soybeans, the E-mini S&P. Those are two of the big markets that require the alternate settings. All right. The vast majority of your charts will work just fine with the default settings, which are the ones that you get right out of the box. So that will be an 8-tick brick. So here's the 6E now with the default settings. So you can see no cloud crossover yet. We did produce a, pardon me, a hard edge bounce signal, which probably occurred a few bars earlier here. Oh, actually, it might have been this one right back here, that counter trend signal. So this counter trend signal and this hard edge bounce signal on the default settings pretty much line up with each other. So it's not like you're missing signals. The reason I have a chart with the alternate setting is because a market like the E-mini does not move very fast. Well, sorry, it doesn't move very fast. The tick size, the brick size, kind of messes with the Raptor a little bit. All right, so here's the doggone that, Eric. Here's the E-mini side by side now with the default settings and with the sped up settings. So here's the default settings. How would you like to try to trade that? It's practically impossible, isn't it? This is why we have the alternate settings. Here's the E-mini now with the faster settings. And you can see, hey, we actually have some trading opportunities here. For convenience sake, I always have one chart set to the faster settings. So in case somebody would like to see the E-mini. I don't have to build a whole new chart. I can just say, oh, just wait a second. I will load up the E-mini, and there you go. I had crude oil on the faster settings for a while, just because crude oil was so terribly sluggish, but now I've put the 6E on there. So don't fret if you're running the default settings on the 6E. The default settings will literally work for 99% of the markets that you are trading. The exception, the big exception, is the E-mini S&P. Now, if you would like more signals, and don't think that more signals means you're going to make more money, but if you would like more signals, then by all means, put the default set or the faster settings on the 6E or even on crude oil if you like. Like I mentioned, it's not going to change the quality of the signals. It may introduce a few more signals, and you'll have to trade accordingly, just like with this number one signal right here, right? When it was printing, there was no pullback yet. And the pullback is part of the cloud crossover signal. So if I did choose to take it right on the hash mark, I need to allow for that. And if I'm not prepared to ride out a swing, well then I'll look for a second push opportunity. Or I'll just let the market retreat into the band and see if it doesn't come out here with a hard edge bounce signal. That's the number 3 signal. The faster settings, you go to your indicator window, you go to your Raptor, and you're going to change your clouds to a 6 and a 4, and you're going to have a 4-tick brick on the hawk. 4, 4, 6. Now the easy way to remember that is a telephone prefix in Moose Jaw, Saskatchewan. See, there you go. Now you'll never forget it. You'll also need to adjust your data series so that you are running a 4-tick brick. All we're doing with the faster settings is trying to make a chart look normal, and I'm using air quotes when I say normal. If you want to know what a normal chart looks like, look at the default settings on the NASDAQ, or crude oil, or the mini Dow, or the Russell, or practically any other market you can think of, gold. Silver might actually need the faster settings. No, silver should be pretty good. But you will notice when you need the faster settings, because your chart, as you saw with the E-mini S&P, is going to look like that. You're not going to get any trading opportunities because the day is all squished together. And likewise, if you're looking down at your time axis and it's printing like 506, 506, 506, 507, 507, 507, 507, that's telling you the bars are unwinding too quickly. Your brick size is too small. The signals are going to print so fast that you have no opportunity whatsoever to react. All right, so I hope that makes sense. But like I said, you shouldn't get too hung up on the settings. When in doubt, go with the defaults. The defaults have been tested through and through, and that's the starting point. Andre says, I would like more reliable signals. Well, the Raptor, by design, has been designed to sacrifice quantity of signals for quality of signals. So when you are getting a signal printing, that's a signal that you can take with a great deal of confidence. As I pointed out, this number one signal that printed here was not as reliable because the setup was not ideal. Like, unfortunately, maybe I can show you on crude oil. Maybe that one will be a little better. 1 second here. Let's see what we got here on the crude oil chart. All right, yes, this is a little better. So we've got a market that's trending down. It's changing direction. That's a pretty obvious change of direction right there. And now we come through and, oh, there's our number one signal. The clouds crossed, a little bit of a retrace into the clouds, comes out. That is almost a textbook number one signal right there. Compare that with the number one signal that we got out of the gate this morning. Hardly the same, is it? This market, if anything, is totally sideways. What traders forget is you can't just trade the last 3 bars on your chart. You have to take context into consideration. Now I get it. If you're just starting, the context is going to be difficult for you to absorb. But if you're really having a hard time with it, just step back and just ask yourself the question, if I showed this chart to an 8-year-old, would they say the market is up, down, or sideways? Don't read too much into it. If I see people do anything wrong, they're reading more stuff into it than what's really there. All right, so if it doesn't look like a solid number one signal, like we're actually getting a trend reversal, that a new trend may be developing, because that's what your number one signal shows you, by the way, is that a new trend is emerging, then avoid it. Better to miss a signal than to get stuck in a bad trade. Now, let's say you did it anyway. Let's say you took the number one signal here. Anyhow, you took it right on the hash mark. Where do you cover the trade? Well, ideally, you need to cover at least 2 swings back. Here's swing 1, here's swing 2. So somewhere around this zone seems like a reasonable stop, or a reasonable place to cover the trade. Okay, so now you're short and the market is backing up on you. Oh, did they not give me one chance? Oh yeah, no, they didn't. Okay, well, this is rare. Normally, the market will give you at least one chance to adjust your stop. But even if you do get tagged for the full amount, remember that this is a safety net. This stop is only here to tell you, oh, I guess maybe I was wrong about that trade. At least I didn't blow up my account. The risk was still contained to 2% of my trading capital. In fact, this is closer to like 1% of my capital. You can take losses like that all day long. You can afford 1% losses. You will have to take 1% losers in a row to wipe out your account. And the odds of doing that are very, very, very remote. So that's how you trade. You know, trading is not about prediction. Trading is more about reaction. And people have it's a learning curve, to be sure. Now, it's a short learning curve. Be patient with yourself, though. But as I mentioned the other day, your job as a trader is not to try to impose your will on the market, but rather to take what the market is giving. That's all you can do. That's all any of us can do. If the market's not in a giving mood, well, you're not going to be taking very much. It's really as simple as that. And the question always boils down to, if you can afford the risk, you take the trade. Yes, Andres is asking about the #1 signals that we're printing here during the overnight and the Asian session. Okay, he says, are those losing because the market was ranging? Yes, short answer. I don't know if you remember, but toward the end of yesterday's session, I suggested that the sellers would, excuse me, try to push the market back down. However, the strong rally that we saw, it was more likely that the market was just going to continue in a bit of a sideways fashion. This #1 signal that finally ended up printed just a minute before the close. So hopefully you know not to take a trade a minute before the market closes. So I would have avoided that one. And then these are through the overnight session. Right, so here's the London Open, and at this point you should be looking at this chart and recognizing that, yeah, we are in fact in a sideways range. And the best way to handle, here I'll show you on the Eagle because it's a little bit more of an overview. The best way to trade a sideways range is, first off, recognize that you are sideways. There's nothing you can do about it. There's going to be buying that goes on down here. There's going to be selling that goes on up here. That's just how it is. There are going to be buyers, or pardon me, sellers that try to short the breakout. And what ends up happening is they sell down here, and then the market starts to retrace on them. There will be some more selling here as the traders try to salvage their position, because what they're thinking is, what the bears would be thinking is, okay, I shorted the breakout, I'm losing money on this trade. But as I get back about halfway into this channel, I'll try to short again, because if the market goes down from here, I will make money on these, even though I'm losing money on these. So essentially, you're working yourself into a break-even situation. Right? You've lost money on the ones you sold down here. You're making money on the ones you sold here. They offset each other. Hopefully, you can get out at break-even or with a small profit or small loss. That's how traders are thinking. The other thing that ends up happening is that, let's say the market drifts all the way up here, and then the sellers decide, okay, well, we'll start to short the market again, and then the selling pressure resumes as they enter this upper end of the trading range. Well, if you are short from down here, you're probably praying that you can get out at a break-even position, right? So what ends up happening is the market comes back down and it tags the bottom end of the range, and all of a sudden you see your opportunity, you get out at break even. Well, how do you get out at break even? That's a buy order, isn't it? Oops, wrong button. So now all of a sudden there's a flood of buy orders into the market, and guess what happens? The market goes back up. And the opposite happens up here, right? Traders will try to buy the breakout higher, then they get stuck and the market goes down, and they're hoping and praying that they can get out of break even, and the market comes back here. They ditch. Well, what are their exit orders? Their exit orders are all sell orders. And then the cycle repeats itself. See, so we had a breakout down here, right? We had sellers short the market right here. The market rallied up, and then the sellers came back in. Market comes down, buyers are trying to recover the market now. They're trying to do that break-even thing I was telling you about. Because there would have been some buying going on up here, probably right about there. So they're losing money on these, they're making money on those, and so they're out now with a small loss. So you can see there was a fair amount of trades exiting, and that's what helped push the market lower. That's why these tests of the extreme are so powerful. Really something to keep a lookout for. You're welcome, Andres. Floyd saying, did you see the huge run on the open? Are you talking about the mid cap? Because I know you mentioned that to me just a moment ago, that the mid cap made a big run. Just a moment here. I will try to pull up the mid cap for everyone. I haven't been following the mid cap lately. Maybe I should put it back on the radar. Oh my goodness. That is a monster run. Just out of curiosity. So in there, probably covered down there, and oops. Yeah, nice move. Stops are a little bit out of reach. I would have had to try to get by with the primary support, I suppose. Yeah, that's a very nice move. Thanks for pointing that out, Floyd. Tony asked, Eric, is the cost averaging a retail traders thing or computers? Good question. I don't think I know. You know, it started with retail traders, so I imagine they program it into some of the trading computers. I suppose that's why 50% fib levels seem to work so well, because if the market makes a 50% retrace, it trips a bunch of trading programs. Okay, we have a little bit of a weak 4-arrow consolidation building here in the Hawk. On a little bit of a retrace. There's one, there's two, there's a third signal. Here's 4. The third signal actually didn't engage. I'm a little bit late to the party on this one, but I suspect prices will try to head lower from here. And a possible late filter entry here on the Falcon as well. Yeah. Just looking back at some of the comments here, I wanted to make sure I didn't miss anything. Aspen asking, hey Eric, how come you talk a lot about Canadian cities? Yeah, I wonder. Is there still snow in Edmonton? I was talking to my cousin the other day, and his birthday is end of April, and he says, I'm looking outside the window and it's still snowing. Well, come on now. Be nice and give me another signal here. I'm almost thinking that we've got a double pullback forming here in the Raptor as well. We don't have the sell signal just yet. Now the double pullback is a variation of the hard edge bounce. What happens is it's a continuation signal, so you need something resembling a trend. What happens is the market pulls into the cloud twice, producing a signal each time. That second signal is the one that tends to spark the market and get things going again. The reason it's doesn't pop up as one of the high probability signals is the programming was just too complicated. There were too many variables. All right, we are getting a late filter entry signal here on the Falcon. There should be a comparable signal on the Raptor. Now the signal has not printed. I'm anticipating the signal will print on the close of this bar, and I'm actually offering up a couple ticks to enter below the low. In fact, I may offer up one more tick. See, there's the signal. I think they slipped me. They did too. Oh, come on. Don't hang up on the support line right now. All right, let's put this on the shelf, and I can deal with Paul's question. Paul's asking, haven't found it yet. Info on specifically what creates a Raptor Cloud cross. Okay. Two things are required for a cloud crossover signal, even though sometimes, and this is rare, so please don't fret about it. The number one thing you need for a cloud crossover signal is for the clouds to cross. The other component to a cloud crossover signal is that the market retreats into the cloud and that the cloud supports the new direction. So in fact, you could interpret this as a cloud crossover as well. Even though it did not print again, that could be deemed a cloud crossover signal. Now, like I said, don't panic because it printed over here before the retrace. You can see that the signal is working out just fine. So the programming works, but for my eye, I like to see both those components in place. So I like to see, where did I put it? Shoot. Oh dear, I think I closed my crude oil chart. Instead of minimizing, I think I closed it up. All right, well, bear with me here a moment while I build another crude oil chart. Because the crude oil had almost a textbook cloud crossover. All right, so here we go. Paul says, I don't see the clouds cross. All right. It might be a little bit more obvious on this one here. Okay, do you see how the clouds are stacked in a rather bearish fashion here? So the soft edge well below the hard edge. And do you see how they begin to cross right through here? And now the soft edges are above the hard edges. That's the first part of your cloud crossover. When that starts to happen, you need to sit up and pay attention because you're going to get a cloud crossover signal. And then ideally, the market will make a little bit of a retrace into the cloud. It will come out and produce your signal. And that's suggesting that a new trend is in play. Now notice if you didn't catch the first cloud crossover, you know, the early little move here, the market did give you a second chance. And this is not uncommon, by the way. This is another reason why I tend to keep my stops a little bit further back. Notice how the clouds are stacked a little bit more bullish at this part of the chart, right? Oops, wrong button. Fat fingers. The market comes back into the cloud and it comes out yet again. All right, and in this case, it produces a number 3 signal, which is the hard edge bounce, but it could be interpreted as a large cloud crossover signal. The NASDAQ this morning is being a little bit more difficult. I suppose it's just the nature of the markets of late. So here the cloud crossover produced the Raptor must have interpreted this little bit of a pullback here as the pullback into the cloud as the clouds were crossing. You see they were slightly bullish here and now they're bearish here. Yeah, they were slightly bearish here and then they turned bullish here. That's why it tried to produce a cloud crossover. They were bearish here, they turned bullish here. This is why we got a cloud crossover. Note that here we just got like a 1-bar retrace. But according to the programming, it was enough to produce a signal. It was not a quality signal, however, because of what preceded it. A lot of sideways trading, as versus what we saw here in the crude oil market, where we see, you know, here we have a market in trend, reverses trend, we get a cloud crossover signal. Clouds are bullish, clouds turn bearish. We have a market that is in a downtrend, it reverses, clouds are bearish, clouds turn bullish, we produce a cloud crossover signal. Your clouds are always going to give you your directional bias. If you cannot determine what the direction is, then how can you have a bias? Right? How can you make sense out of clouds like this? So when you see this, it's important that you step back a little bit. All right, so the NASDAQ now working off that cloud crossover. Whether you took the initial signal or whether you took the later signal, it's still a cloud crossover signal. When in doubt, go with the Raptor prompts. You can trust the programming, but do not ignore the left side of your chart. And you know, you need to realize too that some days it's just tough slogging. The market is, this whole week has been very reluctant. All right, I'm not liking how this is playing out. Came within a couple of ticks of my break-even trigger and then flinched, so I'm going to get ready to get a little bit more aggressive here. If I can get another bar lower, I'm going to start bringing my stops in quite aggressively. And again, it's just the nature of the market. The market is just very, well, I'm not going to say choppy. It's not so choppy. The progression is fine. It's just not following through. All right, well, I think at the very least I should cover above that last swing, so I'll do that. Yeah, Tony says, I got busy with the NASDAQ trades. Did anyone take the crude inventory trade? And it looks like it had a pretty decent breakout, did it not? So here's crude oil. This is the inventory release right here, and a little bit of a break higher, and it's looking like it's going to remain bullish right now. And I'm holding on here looking for the sellers to come back into this market. David, you should never be afraid to ask a question. David asks, Eric, since I don't see it on your screen anywhere and not being afraid to ask embarrassing newbie questions, there are no stupid questions. Did your mother never tell you that? Is there no equivalent in futures trading to the L2 inside market orders view in equities? You know, the lining up of the bids and the asks. Well, it's funny you should say that. The level 2 is available. If you go here to your control panel, first off, people are wondering what the heck is he talking about with level 2? Well, if we put the dome up here, many of you are familiar with the dome. Got to get the right contract month. Okay, so the dome shows your bid and ask, right? It shows the number of orders waiting to be filled, the current market price. Well, there's another dome, if you will, and very often it will display, the second level will display beside this, but NinjaTrader does it a little differently. NinjaTrader does their level 2 like this. And so you got the bids on this side and you got the asks on this side, and you can see the size of the orders. Now, a lot of people aren't aware that there is actually a second level of orders waiting to be filled, as well as a third level. There's actually a level 3, but Ninja, as far as I know, Ninja doesn't provide level 3 data. Some people like to watch the level 2 because what they're looking for is they're looking for abnormally large orders pegged at a particular price. So let's say, well, right now the biggest order was right here, slipped down here. So there's about 80, 90 orders sitting at 56, 66, 75. So there's a big chunk of orders sitting there. The logic is that if I was looking to buy, I would want to buy above 56, 66, 75. So in other words, 56, 67 if you want to go long. As with most things trading related, the big question comes down to, does it help you make a trading decision? If it helps you make a trading decision, then yes, by all means, use it. If it does not help you make a trading decision, then get rid of it. And doggone it, I wanted to roll my stops on this bar. Oh well, I'll have to ride out one more swing, or try to. Traders, I've had people ask me, what about Bollinger Bands? Can I use Bollinger Bands with my DTS or Raptor? Yes, certainly. Mike Filigera, who trades the stock market with the DTS system, he likes fast stochastics. Go figure. I've never known a trader to trade fast stochastics. But he likes it. Helps him make a decision, and at the end of the day, that's all that matters. David asks, thanks for showing me where to find that. Is the state of the inside L2 market at all referenced in the building of the indicators that form the three birds, or are interrupted? Okay, I think what David is asking is the level 2 data taken into consideration by the programming algorithms? No, it's not. The trading algorithms for the DTS and the Raptor are essentially, they have price and momentum type components built in them. So they're looking for certain reactions in price, how price is behaving, and they're also looking for shifts in momentum. That's kind of the whole DTS Raptor system in a nutshell. And if all the parameters are met, well, then the signal is generated. There is a lot more going on behind the scenes than what you see on your chart. There's actually, the charts were stripped down to try to make them visually appealing, but simple to use. There's probably a half a dozen indicators and algorithms working in the background here before you even get a warning dot to print. And they're not just, tweaked out, a tweaked out MACD or a, whatever, a tweaked out RSI or anything like that. No. There's actually price components going on in here. Like, you know, the bars can only move a certain distance one way before it negates a signal or produces a signal. No, it's fairly sophisticated stuff. Dan is asking, was there no inventory for crude today? Yes, there was. I was in the middle of explaining something, so it went right by me. But it does look like crude put in a very nice rally. Here's crude on the Falcon. This was the market pre-inventory. It would have been a tough one to bracket. So there's the market just before the inventory report came out. I'm always impressed how the DTS system picks up the direction the market is likely to make before the report even comes out. So you can see here we've had a trend change signal, right? The trend line is red, changes to green. Here's the up, here's the down, here's the signal, just seconds or a minute before the inventory release, and boom, up she goes. And that happens more often than not, by the way. So sorry for you crude traders, but yes, I was distracted with the NASDAQ. All right, well, I'm going to manually roll above the primary resistance line. And hopefully, oh, that's why I couldn't see the preview. The bar high-low is right on the primary support. And I'm going to run a very aggressive stop now, and I'm going to bring in my break even a little bit and just see what we can do with this particular trade. I'm really going to squeeze it now. See, my concern is we had some support right here, right? And we've traded back through the support. That's kind of how reversals happen. That's the first clue that the market might be getting a little stronger the other way. All right, just taking a look here, making sure I did not miss anyone's question. And thanks for the questions too, because when the market is so quiet, questions at least help us pass the time a little. And we're almost to the top of the hour. We're actually going to close up the room here a few minutes early. I have a presentation to do for Top Step Trader this morning that I need to get ready for. So I hope you'll excuse me, and I will see you again tomorrow. If you are going to continue trading today, well, we definitely have a little bit of a downward bias, but like I said, now that we've kind of broken back through this little support area, I'm a touch concerned that maybe the buyers are getting a little stronger. I don't think it's the kind of day to get too heavy on any of your positions, though. All right, so less is more. You don't want to dig yourself such a deep hole that you need 2 or 3 days of trading to get out of it. All right, gang, I will see you again tomorrow. Bye for now.